So the month of December has been amazing in terms of growth for the channel, in terms of growth in investments, and just the dividend payouts as well. This month has been amazing. As you can see, the portfolio just got to £5,000 with an overall return of £500. So that's about 10% or 11.32% in total. So that's an amazing growth this year. I can't complain. So the growth today has been decent. The market is currently closed at this moment, but these are just from the small investments that I made yesterday. And we can see the past week has also been decent. Earlier this week I was actually on £4,845. So earlier this month I was on £4,605. So we can see that the growth has been decent. My return was pretty low earlier this month and it dropped all the way to 5.76%, but now it's back up to 11. So in the past 3 months alone we've actually doubled our return. So the past 3 months has been really good. So in the past year we actually started with £610 earlier this year. This was on 4th of January. Now today, which is the 28th of December, we are on £5,000. So that's a quick overview on the portfolio so far. So today I'm just going to dive into exactly how much dividends have been paid this month, from what companies have been paid from, what companies actually holding the most weight in my overall portfolio, and what's changed in the past month. Without further ado, let's dive straight into it. So the most recent dividend that got paid was from Consolidated Edison. This was on the 24th of December. I'm probably going to get paid a few more dividends this month because the month hasn't actually ended. But taking a look at this payment, of course, there's the 15% tax rate just because I'm in the UK and these stocks I'm holding are actually US stocks. So I'm always going to get taxed, but it's not much of a big deal at the moment. But without the tax, I would actually have got paid $1.57. So Consolidated Edison's actually been pretty good. So taking a look at the average price, my average price for this stock is actually $75. Right now it's trading for $83. So I've saved quite a lot of money on that. So I've been buying a little bit of this stock since I actually invested. And if we're looking at the history, then we can see that I actually bought Consolidated Edison on 11th of Jan. That was the first ever time I invested into this. Then on the 12th I bought a bit more. Then the next time I actually bought was in August. So what this is doing is it's helping me spread my purchase. So it means that if anything is to go wrong, if Consolidated Edison was to lose out on a lot of money, my whole stock isn't going to suddenly tank because, you know, I bought everything in one day, and if something goes wrong, the whole thing just dies. Then for the next payment, this is Walgreen Boots. Walgreen Boots are currently sold. Walgreen Boots wasn't a bad stock in any way. It's one I would have kept if I really felt like it, but the only reason I sold Walgreen Boots was simply because I was trying to reduce the total number of holdings that I have in my whole portfolio. So I've now reduced it to 25 from 27. But before I sold, I got paid 82 pence in dividends, and again the tax is going to be there because it's an American company. Then the next payment is from Realty Income, which was paid on December 21st. Realty Income is part of the real estate, the monthly dividend companies. So this is one I really like, just for the sake that they pay monthly, which is one, and for the second thing that they are involved in real estate. So this is a very good way for me to diversify my portfolio. It's one that is really helping in that sector, because real estate is something that is massive. It's something that will be good to really get into, but that's if you're actually in real estate itself. You know, when you bought houses and you're renting other houses, that's amazing. But this is like the cheapest of the cheapest way to, I guess, put your foot in real estate, simply because they're helping to rent out their buildings to companies and for them to work and just earning money that way. And us as investors, they are paying us dividends just for holding the company. So that's the best way I can put my foot into real estate at the moment, but in the future hopefully I will be able to do more than that. But Realty Income paid me 95, and I'm always going to be getting this £95 every single month forever. If I assuming I didn't invest a single penny right now, I'll continue to get that £95. And the best part about dividend investing and why I really like it, again, is simply because even if I don't invest a single penny, I'll eventually start getting £1 or maybe £1.10, £1.20, simply because of compound interest. So the money I've invested right now will keep working for me, and they will continue to increase their dividends as well. They will continue to increase their dividend payouts as well over time, meaning that I will just continue to earn more just for doing absolutely nothing. In addition to that, because Realty Income is actually a good company to hold, so they do have a decent growth as well. We can see that they have actually grown overall this year by 16%, meaning that I'm also going to get overall total capital growth on Realty Income if I am to sell any stocks at all. Hopefully they will continue to grow over next year. So this year has been decent, 16% growth in total. Of course, I'm not investing into Realty Income for the total capital growth, but it's still another way to see that I'm earning money. And for the next company, so I got paid by Pemba and I got paid by Duke Energy. So Pemba paid me 51 pence, Duke paid me £1.89. I actually bought 2 shares of Pemba yesterday just to increase that dividend payout, because 51 pence is pretty low in comparison to the other companies that are paying me, but that is simply because I had not invested into Pemba in a while. But right now I own 6.9 shares of Pemba. They are into that oil sector. So oil sector is one that is always weird to me, because every time I invest into it, I keep thinking long term, because I always know that electric stuff is the future. So that's usually where things are gonna go. Everything's gonna be electric, but oil just isn't going anywhere. I refuse to believe oil is going to be going anywhere anytime soon in terms of transportations and just things that are necessary where you need oil for. So that's how I see these companies. Hopefully that is the case. But yesterday I did buy 2 shares exactly at the same time. So I bought 2 shares of Pemba, so that should hopefully increase the total dividends overall. But you can see that before yesterday, the last time I bought any share for Pemba was in August, so that was a while back, and they've been paying me dividends actually in September, they paid me in October, they paid me in November, they paid me in December. So you can see that Pemba is a good payout as well. They're paying monthly, so it's almost like Realty Income in a sense. And yeah, I will definitely invest a bit more into Pemba. And the next company that paid me is Duke Energy, and they paid me £1.89, and Duke Energy is currently up for me by 9.83%, so that's £20 in total. I own 3 shares of Duke Energy, which is amazing. They're into the energy sector now, so we can see that this company here is one of the safer ones. If you look at the dividend safety score, it's around that 80 mark, and they are into the energy sector to help with the whole diversification of the whole portfolio. The last time I bought any share for Duke Energy, which cost £72, was in September, and just that share alone increased my dividends from £1.23 to £1.89. But moving on to Coca-Cola, one of my favorite stock, one of Warren Buffett's favorite stock as well. This is where he has most of his holdings, this is where I have most of my holdings, and I got paid £1.90 by Coke, and we can see in my overall portfolio, Coke is currently 2nd place, and that's where I have most of my money in at the moment. Realty Income is 1st place, but Coke is just right behind at 6.19% of my total portfolio. So Coke is amazing because it's a stock that is you're able to relate to. It's one you can see people buying all the time. It's one you feel like, okay, cool, you're getting somewhere, you know, you're earning some sort of money from every single purchase. It's one that's easily you can connect to compared to all these companies that might be like big energy companies. You know, it's not like every time you turn on the light you just feel like, yes, you know, you're somehow associating yourself with Duke Energy, for example. But Coke is one that you can see people buying. People buy smart water, people buy all kind of Coke. You see all the Coke ads, especially in Christmas. You can see all the Coke ads everywhere, so you can see that they're definitely doing something and taking actions to increase their sales. So I will continue to invest in Coke. Coke is just a company I really like. I do see them going a long way. They are part of the dividend kings now. They've been increasing the dividends for a very long time, for 50 consecutive years. They've also been increasing their dividend payout, so everything about Coke is very stable and solid. And then the next one is 3M. 3M is also one of my favorites, simply because it's a very diversified stock. So it's not actually an ETF, but 3M is involved in several things that you are not even aware about. So they're almost in the shadows in terms of all these products that we do use. They make so many products that I can't even begin to list them out. That's why 3M is actually 5th place in my overall portfolio at the moment. So for me, I see them as like a fake ETF that I can continue to invest into. The average share price for me is actually $178, and it sells for $176. So this means that I have been buying 3M at a bit of a higher price than how much it's been selling for. Looking at my history with 3M, I've owned 3M for a very long time. The first time I bought 3M was when I bought £1 worth of 3M back in July 2020, so that's a long time ago now. And we can see the dividends I was earning then when I had 3M was 4 pence. So I got 4 pence back in September 2020, and now I'm getting £1.94, which is definitely significant in comparison to all the other dividends I've been getting paid by other companies. Now for the next 2 payouts by Exxon and Chevron, I got paid £1.72 by Exxon and £1.73 by Chevron. So Chevron's also another one that I plan on increasing. Exxon is part of the oil as well, so I haven't actually invested into that many oil companies at the moment, but ExxonMobil is one I definitely trust in. So I'm up by 35% on ExxonMobil, so that is extremely high compared to ones I've mentioned before. And this year alone, Exxon actually went up by 48% in total. And the great thing I'm looking out for is, you can see here, they really tanked. So this was during the whole virus situation, and afterwards we can see that they're slowly creeping back up. But this is an amazing opportunity for me because this means I can buy back and buy so many shares before they go back up again to a stable level. And we have Chevron as well. Chevron just kind of in the same category. Chevron is definitely one I'm going to buy more of as well. So really and truly, the only hindrance right now is I just need a higher capital. The more capital I have, the more I can invest in all these companies, because I do not plan on selling any of these stocks at all. I probably will leave every single one now. 25 is a good number. Going to invest even more and more into all of them. And now just to quickly breeze through the final ones, we can see that I got paid by Johnson and Johnson, which is extremely secure. Pfizer is just going to continue to produce medicine and cures and just find out, you know, new innovative ways to help with people's health. So this is definitely one that's going to be good for the future, because there's always going to be diseases, there's always going to be problems with health, and as Fiverr continues to be, you know, in front of those, that's just going to be more money and more growth for Fiverr. So currently we're on the 28th of December and I got paid 13 times so far, and just by roughly gauging how much I got paid approximately £15 in the total of December. So that is really good. Adding that to my other passive incomes and the other side hustles, then all of this is adding up to a significant amount in this month of December. And to quickly show you guys how I track my dividends, so this isn't a sponsor video in any way, shape or form. This is just an app that I believe can definitely help you guys. So you can see overall I'm actually earning approximately £13 per month, and in the month of December I'm actually getting around £17, so I'm due to get more dividend payments. We can see tomorrow I'm actually going to get paid by Vanguard FTSE, so that's the ETF that I do have for my dividends portfolio. Then more dividends to come. Guild Science is going to pay me again in a day's time, and we can see a lot of ex-div dates that are coming up. So this means if I do want to buy any share, then now would be the best time. And the best thing about this app as well, it shows you the earnings and when the earnings are going to come out. It's the best way to prepare if you want to look out for the news, if you want to look out for dates to buy different stocks, or when you want to sell your stocks and everything along that line. It gives you all of that information. My average yield for my whole portfolio is currently at 3.24%, so that isn't actually low. I think that's a very good point to be at. So overall it averaged out to 3.24. That's definitely good, because too high would mean I have a lot of risky stocks, and too low would mean I'm too safe. I'm invested into like too many, you know, 99% safe stocks like Johnson and Johnson, for example. So you can see that earlier in 2020 my dividends was actually £2.31 earlier in 2021. So this was back in like January, March. We can see I was only getting around £7, £3 per month, £2 per month. And we can see from next year this is all increases significantly. I'm going to be getting £162 per year, so that's going to be £13.54 per month. And to dive into further analytics as well, we can see that it shows me all my asset allocations. So of course, you know, Realty Income, Coke being the top two, and we can also see the sectors that I'm invested into. So manufacturing is the biggest by far, but of course it's because most of them are manufacturing companies, you know, cars or oil companies or energy companies, so most of them fall in that category anyway. But the rest is utilities, financials, industrials, communication, science, and, you know, other technical services. But to dive further into industries, and we can see there's a ton, you know, just looking at the top ones, you know, pharmaceutical preparation, manufacturing. We also have transportation of crude oil, and overall I'm investing into mostly United States, and then we have others. The UK is actually 3%, because that's really low, and that's just because most UK stocks just don't interest me as much. You know, they're just not on the same level as US stocks. That's just the sad part about it. So this app is definitely great. It's one I recommend to every single person if you do want to track your dividends or your growth stocks as well. I actually do track my growth as well on this, and I can easily switch between, you know, both of them. I'll definitely recommend it to every single person. It's a free app, but for an improvement, I hope in the future they'll have a function that shows the whole compound interest and compound growth, just so you can kind of get a rough idea of how much dividends you'll be getting in like the next 20 years or 30 years. But thank you guys for watching. This year has been amazing with the growth on the YouTube, with the growth on my portfolios. I really appreciate every single support from you guys on every single video, and the best part about the channel is always that you guys can always go back to find out my progress, to see exactly where I started from, when, you know, I had only £500 invested to now where I actually have £5,000 invested, so you guys can see the whole journey on what's happened throughout that period. So that's why I put together a playlist right here for you guys to actually click on, go and watch that, just to find out, you know, the whole journey, just to see more of what's happened in depth and the reasons to why I've sold certain stocks. So thank you to Trading212 for providing a platform for me to invest on. Thank you to YouTube for also allowing me to upload this video for you guys to watch it, and most importantly, thanks to you guys for being here and watching this video. So with that being said, I'll see you guys in the next video, and see ya.